That's it, the trend is over. What's the importance of a calming candle, my friends? It's the balance of interest between sellers and buyers. At this exact moment, a very good counter-trend setup emerges with a very good risk profile. This is how you should open positions and work with a stop loss. Following such a simple tactic will allow you to be more successful than 90% of stock market participants. Hello friends, you're on the Old Trader channel. My name is Vladimir Karasyov. Today we'll take a detailed look at Palantir. We'll look at the trading setups. We'll look at the point where you should open a counter-trend trade. We'll talk about stops, movement potential, and analyze this company in detail across different time frames. What's happening in the long term and what's happening in the medium term. So friends, be sure to watch this video to the end. As usual, the most interesting part is at the end. So let's get started. Currently, Palantir is in a downward trend. Yes, so it's not just a correction or a pullback. It's a clear downward trend that actually started here in November 2025, after a very long and significant upward trend finally came to an end. We see the candle body's lows going below the lows of the previous month's candle body, October 25, and the lower wick going below the previous month's lower wick. That's it. The trend is over. A downward trend movement has begun to form. So what do we have now? The first month, second month, third month, fourth, fifth month of downward movement. But now, friends, pay close attention. Let's look at how Palantir handles the price cluster that was formed right here in February 25. That's the $125.41 level. It's important to understand, friends, that there are trend trades in the direction of the main trend and counter-trend trades in the opposite direction. And today I'll show you the moment when a trading setup appears to open a counter-trend trade. So for this, let's switch to the medium-term time frame, the weekly time frame. Let's start, friends, with the fact that right here at the $125.41 level in February 25, a significant price cluster was formed. And notice that as a result of the downward trend, we've reached this price cluster. And it's just like we said before in the videos on our channel. Look, we're going down, right? There are no breakouts of the previous cycle's highs. So the weekly chart is down, down, down. And right here, friends, notice a candle appears whose body goes higher than the previous candle body, and its upper wick goes higher than the previous week's upper wick high. That's it. This downward movement from a medium-term perspective on the weekly time frame is now over. So the long-term downward trend continues, but the medium-term move within that long-term decline has ended. And let's look at how beautifully the trading setup formed in this counter-trend medium-term movement. Look, after this candle appeared, right, the one that ended the downward move, we saw counter-trend volatility. One small candle near the highs of the previous one, and then a stabilization candle appeared. Why is a stabilization candle so important, my friends? It allows you, if the highs are broken, including the upper wick, to open a position with a high quality stop and very low acceptable risk. And this week we have a breakout of the previous candle's highs, including the upper wick at the level of, let's see, $156.75, where a position is opened. The stop loss is placed right here, below the level of last week's candle, including the lower wick. So, the stop loss is at the level of $149.09, right here, for the current week. When this week ends and the next one begins, the stop loss level will move from here at $149.09 to here at $151.64. Friends, this is how you should open positions and manage your stop loss when you are in a trade. Only this way. To recap, the trend is downward, and at this point it concludes. Then comes counter-trend volatility. A candle like this indicates that the traders who broke the downward move are very serious. We don't see a deep drop and then a small candle with a tiny body appears. This represents a balance of interest between sellers and buyers. And this week we see a breakout of the previous weekly candle's highs, including the upper wick. That's it. At this exact moment, a very good counter-trend setup emerges with excellent risk parameters. This is the most important part because when opening a position, we don't know how far it will go in our favor. But from the start, we must understand the amount of risk we are taking on when we open a position. Friends, pay close attention to this because we don't know how the move will develop as a new upward trend forms. But we must clearly understand the level of risk we are assuming if the trade goes against our scenario. And here again we have a very small candle and the risk size is very favorable. So to repeat, a medium-term counter-trend trade is open in Palantir on a breakout of the previous weekly candle's highs, including the upper wick at $156.75, right here. And the stop loss at the moment is the level of the minimum values of the last weekly candle, including the lower candle shadow. That's the level of $149.09. Friends, that's it. Following such a simple tactic will allow you to be more successful than 90% of stock market participants. So friends, take note and use it. Profitable trades to everyone. Good luck. Talk to you and see you soon.